Good morning, everybody. Joe Ciaccio here. Happy Monday to everybody. Hope everybody had a fantastic weekend. Quarter one is almost over. Have you decided what you want to do to generate more sales? Have you decided what you want to do to make more money? You thought about doing Medicare Advantage? Have you thought about maybe doing a little bit more term life insurance? Have you thought about maybe doing under age 65 health insurance due to the change in the Obamacare subsidies? There's a lot of things that you guys can do to add money to your checking account. And what ends up happening, we get stagnant. We get to the point to where we feel comfortable where we are. Comfortable to where we're complaining we're not making enough money, yet we're not willing to take the extra step to move forward. And what ends up happening, you got that little brain in between this head of yours, and it's saying, don't do that there. If you mess up, people are going to think bad about you. If you mess up, oh my God, it's going to upset you. Let me tell you, every person in life who has taken a chance has not always succeeded. It's a fact. It's a fact. There are people that have gone bankrupt and come back because that's just the way their brain is. They've got to continually move forward. So I'm asking you to ask yourself, are you content where you are today? Are you happy where you are today with the amount of money you're making? Very few people will say yes. They're going to say, well, I'm doing all right. I'm making ends meet. If that's where you want to be, there's nothing that I can do to convince you to do more. Yet, there is more. I'm going to talk about just one thing today. In addition to adding a different line or adding a different carrier, adding something that will interest you to motivate your mind. Because what motivates me is helping people, and the reward is making money. The reward of going to work makes me feel good. When I feel good, it energizes me to where I want to try different things. And what ends up happening, as I said earlier, you get kind of stagnant. You're kind of like a person out on a boat. You know how to swim, yet if you can't touch the bottom, you feel that something's going to happen. And there's times when you got to jump out of that safety net, jump out of that boat, get into the waters where the sharks and the whales and the tigers and the lions are out there, to where you got to sit and say, I've got to survive. Think about it. Okay, circle back around. What about if you could do something now when you're doing your final expense? When ends up happening, we go to somebody's house or we're on the phone with somebody and we feel that they're giving us that vibe that they can't afford much. They're on a budget, they got bills they got to pay, they're behind on this, they're behind on that. So what we do automatically, we feel, let me show them a low premium to make a sale. Anything wrong with that? No, nothing wrong with that there. Yet you're leaving money on the table. Everybody cries. Nobody wants to spend money. People will spend money if they see that there's a value to it, if they can logically decipher it in their mind, this is worthwhile me spending money on. So this is why your sales techniques need to be sharpened. You need to constantly be studying how to speak with people, not to them, how to speak with them. Let them know the value that you're going to offer them, the value that is going to help their family out when something happens to them and they pass away. So, let's say you're on the phone with somebody. I'm going to say probably 75% of the sales we make now are on the phone. I like to tell people, get out a pen and paper. I'm going to go over some different ideas with you, some different programs. And from there, what we're going to do is we're going to figure out the one that you feel is best for you. Now, you're thinking they can't spend much because they told me they couldn't spend much. They told me they got to pay some bills before they move forward on doing anything. So let's sit and say you went through the entire process, showed them that when they pass away and they have no life insurance, the burden's going to fall on either a spouse or a child. You've gotten them to admit to you that they don't have any money in savings, their children don't have a lot of money, and they told you, I don't want to leave my child with this debt and the burden because of me. So now's when you have to start learning how to tell people that you can design a program for them that will cost them money now, yet it will save their children lots of money later. And what I like to do, I like to get my little fingers make the size of a check. What we want you to understand, Mr. Jones, is that today we're going to try to figure out how much money you can put on this little check. Okay? Because if you don't put enough money on this little check, when this sad day comes and you pass away, the burden that you want to relieve your children from is going to be even larger, because now, with my hands all the way to the left and the right, the top and the bottom, they got to come up with this big check at one time, unexpectedly. Okay? So what we're going to do today is figure out what you can afford, what you feel you're going to need, and then from there we're going to kind of push it just a little bit to where when you put your head down at nighttime, you know that you've got almost your entire expenses paid for to relieve your children, especially when they're going through this sad time. No, you don't want your kids doing a car wash and doing a bake show and going on a GoFundMe, because they're not going to be able to generate the money in time to bury you. That's where a lot of people say, oh, I'm not going to worry about it. I'll let the kids worry about it. Well, the kids have no money. They don't know what to do. They have no idea what to do. So let's talk about when you show the pricing to the people. I like showing more than one or two prices. I like to tell people what I'm going to do is I'm going to give you 5 different ideas, 5 different programs to pick from, and that's going to give you an idea of what the plans are available for you in your area. My company's already done all the research. We know the best plans that are available, because this is our jobs to take care of people like you every single day. Some of the prices I put there may be a little bit out of your budget, yet I need to show you what's available, because it may be something you want to stretch your dollar to get a higher plan. So let's say you got a 60-year-old person who's told you they really can't afford much. I like sticker shock. When I show somebody a price for $172.14, that 60 or 70 looks kind of cheap. Even though it's not cheap, yet it looks more reasonable than one that's almost $200. Why do I do that? It's just because it works. What happens is that if you listen to what the people say, and you're going to do a plan for $30, $40, you will make a sale. Yet, I'm going to come in behind you, and I'm going to say, do you have any policies that you have recently purchased? Oh yeah, I got one about 6 months ago from this guy. His name is Joe. Real nice guy. He got me a policy for $5,000 for $38 a month and all that. So what I'm going to say is that, do you think a $5,000 policy is going to bury you when something happens to you? You're only 61 years old. You've got a minimum of 20 more years to live. Do you think 5,000 is going to cover you then? Because 5,000 won't cover you today. So what we're going to do is that we're going to decide and figure out exactly what you can afford, because it's better to start a bigger one today than to have your kids pay the exuberant price later on. You're kind of setting the tone. You're setting the field to let them know you're going to come out with a higher price. So my goal is, providing their health is good, is that I'm going to get rid of that $5,000 policy. I'm going to tell them, cash that in. You don't need that one no more. Let me get you a bigger one. No need to have 2 payments. Let me just have you 1 payment, and I'm going to get you a better program, less money, and give you more peace of mind that when something happens to you, your kids are taken care of. Because that 5,000 is not enough. Well, Joe, I can't afford much more. I'm on a tight budget. So, well, is this something you cannot afford, or is this something you do not want to afford? Because when it comes to making decisions, it usually is all about money. And I understand you don't have a lot of money, yet you told me your kids don't have much money, you don't have any money in savings, you don't know what's going to happen. So we need to talk about that. If you think times are hard now, Mr. Jones and Mrs. Jones, when something happens to one of you, you're both on Social Security. Mr. Jones, you get $1,500 a month. Your wife gets $500 a month from Social Security. You guys have a total of $2,000 a month coming in. Do you know what happens to your Social Security income when one of you passes away? Yeah, I'm going to get hers and half of mine and 3/4 of this one. I'm going to come up with all these ideas. And basically, the long and short of it, the really easy way to explain it, because there is a formula, is that the living spouse will pick the higher of the two's income. So, Mr. Jones, if your wife passes away first, you keep your $1,500. She's going to take her $500 with her. Mr. Jones, you pass away first. Your wife's going to say, I want that $1,500, yet I can't keep mine, so okay, you can take my $500 with you, honey. So what has happened now is that your household has just now dropped income-wise by $500 a month. You've lost $6,000 in the next 12 months because one of you passes away. Now granted, you're not going to pay for haircuts no more, not going to pay for food no more, yet you still got where you live, your phone bill, your electric bill, car payments, car insurance, whatever expenses you may have. So I'm thinking now, if we design a program for you both to where when something happens, you're going to have enough to take care of the funeral and have a little bit of money left over to take care of that $6,000 you're going to lose the first year. It's going to give you time to maybe have to go get another job, maybe move in with one of your kids, but it's going to give you a little bit extra breathing room. So if you guys were to pitch in just a little bit more together every month, we can get you a plan that's a little bit bigger, so when something does happen, you know you've got a cushion for losing that $6,000. I'm leading up to showing the higher premiums. Let's say your comfort zone is $45. And what ends up happening, $45 is two numbers, $45. Two numbers, 4 digits. What's there between saying 45 and 85? Ooh, what happens is that you get nervous. Your body says, Joe, you can't show those high numbers. They can't afford it. They're on a budget. They got bills they got to pay. Look how they live. So what's happening is that little pea brain between your two ears is restricting you from showing a higher premium to help that client out, actually doing the right thing for them. So instead of them spending money on this, and this, they're pre-planning for their funeral to give them peace of mind at nighttime when they go to sleep, it's taken care of. And you're going to tell them, it may be a little bit more than what you want to spend, yet in the long run, it's going to pay off. Because your kids are not going to have to pay for that when something happens. $45, $85. Let's sit and say, depending on what type of agent you are, let's say you do 3 policies a month. Just 3. I'm going to go a small number. And you're going to bump that premium from $45 to $85. That's $40 more. Let's just say, beginning, you can only bump it $20 because you just don't have the courage to say $85 or $90 or $95. You just don't have the courage to. So let's say you sell 3 policies at $20 higher premium. That's $60 per week extra that you're putting into your account. $60 a week. That's another policy by you just showing them a higher premium. $60, do the math. How much commission you're going to make? 60 first week, 60, 60, 60. That's a lot of money you're going to be making. 60 times 12 is $720 extra in annualized premium. Say you're on a 100-point contract. You're making $720 a week more. Then you have to do your advances to bring it down a little bit. When you're speaking to somebody and you say 45, 65, 75, 85, all you're doing is discussing with them the plans that are available to them. You're not telling them that they have to spend that much money. You're giving them the opportunity to see what's available. Because if you don't show a higher premium, if you don't show higher face amounts, you're not going to make the extra money. Now, you may think I'm being tough, but what I will tell you is the example I gave you earlier. Somebody will come behind you, because the people that send these cards in or call in are called responders. If they speak to a guy that has a silver tongue, and that person not can convince them, yet can show them that if they spend a little bit more, it's going to make them feel better and their kids are going to be happier, the second guy is going to win and you're going to lose. I want you to be the second guy. I also want you to be the first guy to show the higher premiums. So with that said, guys, if you need something, give us a call. We appreciate you. Drive safe, call safe. Take care. Bye-bye.